the stock scare is over, everyone's back into buying.
I mean, maybe. I mean, the funny thing is that the S&P 500 dropped about, 20 points in the last sort of 15, 20 minutes of trading, and it's going to yawn. Which just speaks, I think, to the new volatility environment, is we're getting used to a larger amplitude of moves.
You've been going back, and obviously the question on everyone's mind is like, what does a bottom really look like, and what are those telltale signs? And I think you've been going back and looking for how markets bottomed in the past. What are the things that people look for to say, okay, this looks like a durable bounce?
I mean, obviously you're looking for some sort of massive volume at the low. I mean, ideally you have a technical formation that shows people selling, and then that selling eventually being rejected. And you've had a bit of that, I think, through this little trend. The pace of decline was so rapid. It really feels to me like you're gonna. I mean, if we get above, say, 27.25, which was last week's high after the initial sort of descent, then you might have people saying, "Oh, well, was this the dip I've been waiting for?" I mean, a piece of an anecdote for you. We had an old neighbor, and I mean, when I say old, like an 83-year-old lady that used to live across from us, over for coffee yesterday. And she's like, well, I mean, my financial advisor said the market was going to dip, and correct, and well, here we've got it. We've got the correction.
So did she buy the dip?
Well, I didn't ask her whether she had put the bid in.
But seasoned investor, though.
Yeah, but I think it's quite telling that a retired elderly widow is still on top of this sort of thing. But as I said, if you get above sort of last week's highs or last week's sort of the high on Tuesday, then the fear of missing out comes back, and you say, well, it just went on sale by 10%, and I was scared then, but now it's only down 5% from the highs. Do I have to get sucked back in?
Put the rise in rates in perspective, though, because it did feel at the beginning of last week in particular, it was the shift, the reassessment of rates, particularly the forward curves that we saw that jolted investors to some degree. And yet at the back end of last week, we were pointing out that break-evens had barely budged. And this wasn't, for many reasons, really an inflation story. And you point out this perfectly with your chart. Yeah, so
if we decompose the rise in 10-year yields this year, they've risen about 45 basis points. Something like 80% of that represents a rise in real yields, which you can put down to, I think, obviously the concerns over supply,
yes,
vis-a-vis the budget deficit, but also perhaps an uptick in expectations for real growth. So from that perspective, I think it's not necessarily deleterious in the medium term for equity gains. I would be much more concerned if the rise in yields were driven by inflation expectations, because broadly speaking, inflation is an unmitigated negative for risky assets, because the implications for the Fed trying to slow the economy down.